Chapter number 3, Legal Structure of Mutual Funds in India. Here we will discuss about the legal structure of mutual funds, key constituents of a mutual fund, organization structure of asset management company, and role and support functions of service providers of mutual funds. What is mutual fund? Mutual fund is a trust. A mutual fund is constituted in the form of a trust, and the instrument of trust is in the form of a deed duly registered under the provisions of Indian Registration Act 1908, executed by sponsors in favor of the trustee named in such an instrument. What is mutual fund? Common pool of funds contributed by investors and invested in accordance to the objectives. Investments are held in a trust of which the investors alone are the joint beneficial owners. Trustees oversee the management by investment manager. Structure of the mutual fund. See, it is explained in a structured form. You just go through and check what are the main constituents of the mutual fund. Mutual fund structure. In India, mutual funds are public trust under the Indian Trust Act 1882. Mutual funds has 7 constituents: sponsor, trustee, AMC, that is asset management company, custodian, R&T agent, that is registrar and transfer agent, distributors and bankers. Key features of a mutual fund that flows from the definition above are: it is established as a trust. It raises money through the sale of units to the public or a section of the public. The units are sold under one or more schemes. The schemes invest in securities, including money market instruments, or gold related instruments, or silver related instruments, or real estate assets. Mutual funds are constituted as trust. Therefore, they are governed by the Indian Trust Act 1882. The mutual fund trust is created by one or more sponsors, who are the main persons behind the mutual fund business. Every trust has beneficiaries. The beneficiaries in the case of mutual fund trust are the investors who invest in various schemes of the mutual fund called unit holders. The operations of the mutual fund trust are governed by trust deed, which is executed between the sponsors and the trustees. SEBI had laid down various clauses that need to be the part of the trust deed. The trust acts through its trustees. Therefore, the role of protecting the interest of beneficiaries, that is investors or unit holders, is that of the trustees. The first trustees are named in the trust deed, which also prescribes the procedure for the change in trustees. To perform the trusteeship role, either individuals may be appointed as trustees or a trust company may be appointed. When individuals are appointed as trustees, they are jointly referred to as Board of Trustees. A trustee company functions through its Board of Directors. Day-to-day management of the schemes is handled by Asset Management Company, that is AMC. The AMC is appointed by the sponsor or the trustees. The trustees execute an investment management agreement with the AMC, setting out its responsibilities. Although the AMC manages the scheme, the custody of the assets of the scheme, securities, gold related instruments, real estate assets, and silver related instruments, in which a custodian who is appointed by the trustee. Investors invest in various schemes of mutual fund. The record of investors and their unit holding may be maintained by the AMC itself, or it can appoint a registrar and transfer agent, that is RTA. Organization structure of asset management company. Let us understand the organization structure of mutual fund company. The working of a mutual fund is more complex than like other companies. Like any other company, a mutual fund house consists of employees at different levels performing different functions. In this article, we will tell you about a mutual fund house structure. We will also outline the roles performed by each tier of employees in the fund house. Structure of the Mutual Fund Organization (SEBI). Securities and Exchange Board of India is a regulatory body that manages all mutual funds in India. It has mandated a three-tiered structure of any fund house in India. These tiers are as follows: sponsors, trustees, asset management company, that is AMC. Each of these tiers has their specific responsibilities and specific eligibility criteria. Let's take a better look at each of them. Structure of mutual funds. SEBI's regulations specify how the sector is to be structured, right from the institutions that keep it running to the entry requirements for these players as well as their roles and responsibilities. If people feel relaxed about their mutual fund investments, it is largely because of the regulatory safeguards. For a mutual fund investor, it helps to understand the different components of sector. As mentioned, market regulator SEBI forms regulations which govern the functioning of mutual funds. These pertain to disclosure requirements, mutual fund classifications, and investor relations, among other things. But SEBI is the only one player out of many, and this article will introduce you to many institutions that make up the world of mutual funds. How mutual funds are structured. As per SEBI's regulations, every mutual fund has a three-tiered structure, and fund houses have to disclose the details in their scheme-related document. Let's function on these three components of this structure. Tier 1. Fund sponsor. A sponsor or a guarantor is an individual or company that launches their mutual fund. The sponsor sets up the mutual fund as a public trust under the Indian Trust Act 1882. In simple terms, a trust is an entity created to transfer property from one person to another. In case of a mutual fund, the fund is set up to hold assets on behalf of its investors, but it is not a charitable trust. The sponsor creates the fund with the express intention of earning money. However, not everyone can be a sponsor. The SEBI regulations specify certain entry conditions for mutual fund sponsors. As per the regulations, a sponsor must meet the following criteria. The sponsor must have experience in the financial services industries for at least 5 years. The sponsor must have a positive net worth. Having a positive net worth means that the assets of the sponsor exceed their liabilities. The net worth of a sponsor must exceed the capital contribution put up by the asset management company. The sponsor must show profits in the previous 3 years, including the last financial year. The sponsor must have a share of 40% or above in the AMC. Sponsors have to contribute a minimum of 50 lakhs or 1% of the corpus raised in the NFO, whichever is lower, as initial contribution to the corpus of the mutual fund. Tier 2. Trust and trustees. The sponsor generally appoints a number of trustees for the mutual fund. The sponsor also creates a trust in favor of the trustees through a trust deed. These trustees are now tasked with managing the trust. This means they are responsible for the fund's performance. They are answerable and accountable to the investors. They are the representatives of the fund to the authorities. They must ensure that the fund complies with SEBI's regulations. Once every 6 months, they must report to SEBI about the fund's activities. They must appoint competent fund managers to run the fund. They must set up the mutual fund office and hire a back office team. They must appoint a compliance officer or ombudsman to deal with investor complaints and feedback. If the AMC wants to launch a new fund, they need approval from the trustees. Some laws applicable to the trustees are the Indian Trust Act, the Companies Act, and the SEBI Mutual Fund Regulations. The structure of the mutual fund has safeguards to ensure multiple levels of accountability. The trustees function similar to the board of directors of a company, and SEBI has some rules pertaining to who can be appointed as a trustee. At least two-thirds of the trustees must be independent and not related to sponsor in any capacity. There must be a board of trustees with at least 4 independent trustees. The third tier is the Asset Management Company AMC. Day-to-day operations of the mutual fund is handled by the AMC. The sponsor or the trustee, if so authorized by the trust deed, shall appoint the AMC with the approval of SEBI. Now, what is the eligibility criteria for an AMC? The AMC need to have a minimum net worth of rupees 50 crore. The appointment of the AMC can be terminated by majority of the trustees or by 75% of the unit holders with the approval of SEBI. The directors of an AMC need to be persons having adequate professional experience in field of financial services and should not have been found guilty of moral turpitude or economic offense or violation of securities laws. At least 50% of directors should be independent directors, that is not associated with the sponsor or the trustees. The AMC is a fund manager or investment manager and it charges a fee for its services. The AMC is responsible for a day-to-day management of the fund. Here looks at its various functions. It can launch new scheme and close old schemes. It can make decisions about total expense ratio TER, the assets a particular scheme will hold, and much more. It is directly responsible for funds performance. It is the fund manager's responsibility to ensure the funds provides maximum returns to the investors. It appoints auditors, the registrars, and the share transfer agents and a custodian, as well as negotiates their compensation. It presents accounts to the trustees. The onus of investor education also lies heavily with the AMC. To prevent the misuse of investors' fund, SEBI has strict regulations about business activities of an AMC. Here are some of them. An AMC may not provide portfolio management services or general management and consultative services to other mutual funds. It may not invest in its own mutual fund unless this is disclosed in the offer document. It cannot become a trustee for any other mutual fund. Other institutions in the mutual fund ecosystem. Apart from the sponsor, the trustees and the AMC, some other institutions are also a part of mutual fund ecosystem. These entities work together with the AMC to ensure the smooth functioning of the mutual funds. Custodian. Even though the AMC purchases assets, it does not physically hold them. These assets are held by the custodian. Take a look at some of the primary functions of the custodian. They are responsible for safekeeping of records for the AMC. They manage the delivery and transfer of securities. They carry out record keeping and back office processing for mutual fund. In case of asset purchases, the custodian ensures the funds are paid out to the seller. They manage the dividends and interest earnings from fixed income instruments for mutual funds. Whenever a company notifies a bonus issue or a right issue, the custodian ensures that the AMC gets all the benefits that is supposed to. They maintain a list of assets purchased and sold by mutual fund. Thus, the custodian monitors payouts received and gains accrued. However, the custodian does not make any recommendations to the AMC. They also cannot initiate any buy or sell calls on behalf of the AMC. Their functions are limited to back office work. Some international funds make investment overseas. In such cases, the custodian plays a vital role in tracking communications that the mutual fund receives from the companies it has invested in. Role and support function of service providers. One is fund accountant. Now, what is the job of the fund accountant? See, every day the value of the share changes. Accordingly, the NAV also is changing and it is to be calculated every day. So the role of the fund accountant is to calculate the NAV on daily basis and publish on the respective sites. The fund accountant performs the role of calculating the NAV by collecting information about the assets and liabilities of each scheme. The AMC can either handle this activity in-house or engage a service provider. There is no need for registration with SEBI to perform this function. Registrar and Transfer Agents (RTA). The RTA forms a link between the AMC and the individual investors. In case of any modifications in the folio number or information, investors have to reach out to the RTA. Let's take a closer look at the RTA's main functions. It maintains the exhaustive records of the investor including folio, number of units, scheme details, history of transactions, contact details of the investor, KYC of the investor, and so on. It sends account statement and periodic report to the investors as well as intimate them in case of dividend declaration. It maintains the list of investors including additions and deletions on each day. The AMC sometimes provide RTA services in-house, but at other times the functions are outsourced. Many mutual funds prefer to outsource RTA functions since it is not their core competency. CAMS and CARVI are the two kinds of India's largest RTAs for mutual funds. Reports of AMC to ensure funds are being used for the reason they have been collected. Auditors certify that there is no evidence of fraud in the books. The AMC is free to decide who to appoint as an auditor and decide on the compensation for the service. But it must follow all the rules regarding the appointment of auditors as well as publish the auditors' reports and carry out other tasks detailed in the Companies Act. Auditors are responsible for the audit of accounts. Accounts of the mutual fund schemes need to be maintained independently of the accounts of the AMC. The auditor appointed to audit the mutual fund scheme accounts needs to be different from the auditor of the AMC. While scheme auditor is appointed by the trustees, the AMC auditor is appointed by the AMC. Distributors. Distributors need to pass the NISM certification examination, NISM-Series-V-A Mutual Fund Distributors MFD certification examination, and register with MFI. Distributors have a key role in selling suitable types of mutual fund schemes to their clients, investors. A distributor can be empaneled with more than one AMCs. Distributors can be individuals or institutions such as distribution companies, broking companies, and banks. Next comes collecting bankers, payment aggregators. The investor's money goes into the bank account of the scheme they have invested in. These bank accounts are maintained with collection bankers who are appointed by the AMC. Payment instruments against application handed over to branches of the AMC or the RTA need to be banked with the collecting bankers so that the money is available for investment by the scheme. Thus, the banks enable the collection and payment of funds for the schemes. There are some payment gateway providers, digital wallets, and payment banks. All these players facilitate the transactions by allowing investors to buy mutual fund units. KRA, KYC registration agencies. It is mandatory for all investors in the securities market, including the mutual fund investors, to be KYC, Know Your Customer, compliant under the provisions of Prevention of Money Laundering Act. The KYC process, covered in detail later in the book, involves establishing the identity and the address of the investor. SEBI issued regulations for registration of Central KYC Registry Agencies KRAs in 2011. KRAs process various details and documents to establish the identity of the investor and assign a number through a letter. Valuation agencies. SEBI has issued guidelines for the purpose of arriving at fair valuation of debt securities that are non-traded or thinly traded. There have to be at least 2 valuation agencies that provide valuation metrics. The AMCs have to make use of these metrics to arrive at fair valuation of these investments. AMFI has appointed CRISIL Limited and ICRA Limited for the purpose. Credit rating agencies. Now, the debt securities are rated accordingly to the company it belongs. There are certain debt securities which are AA, some of them are AAA, AA plus. So, various ratings are given by the credit rating agencies. Credit rating agencies rate debt securities issued by various issuers. In case of fixed maturity plans, FMPs, the AMC is allowed to disclose the proposed rating profile of the scheme before the profile is constructed. It is then mandatory to invest in debt securities only within the proposed rating profile or less risky papers, higher credit rating than proposed. Credit ratings of instruments portray the quality of the portfolio. Earlier, whenever you were purchasing any type of shares, it were in physical form, but now it is mandatory to purchase any types of shares in a dematerialized or electronic form. So who is holding such dematerialized shares? That is the depositories. A depository is an institution which holds the securities in dematerialized or electronic form on behalf of the investors. There are 2 depositories in India, viz. National Securities Depository Limited, NSDL, and Central Depository Service Limited, CDSL. Please go through this all short forms. Let us understand what is the difference between the depository and the RTA agent, that is the registrar transfer agent. A depository is an entity that holds financial securities electronically, and registrar and transfer agent is an intermediary between the depository and the issuer. Depository is a bank, organization or institution that holds and helps trade securities. Depositories help investors buy and sell securities electronically and reduce the risk of holding physical securities. Now let us understand what is the function of the compliance officer. Compliance officer needs to ensure all the legal compliances. The compliance officer sign a due diligence certificate in the scheme documents of new issues. Compliance officer work closely with the trustees on various compliance and regulatory issues. It is the responsibility of the compliance officer to report any issue of non-compliance directly and immediately to the trustees. Now let us understand the role of the fund managers. The fund management is handled by the fund managers. Fund management is the most critical function in an asset management company. The main function of this team is to invest the investors' money in line with the stated objective of the scheme and to manage the same effectively. That is, suppose there is a NFO of pharma sector, then the fund managers are bound to invest in the pharma stocks. That is called in line with the stated objective. Normally, the team can be broken into 3 sub-teams: the analyst, the fund managers, and the dealers. Job of the analyst is to identify investment opportunities. The performance of the scheme is the fund manager's responsibility. The third sub-team is that of dealers, whose responsibility is to place orders with securities brokers based on the institutions of the fund managers. Now let us understand that what is the operation and the customer service team in the AMC do. Such team is also called the front office team. This is also a team in the back office to help investors by resolving various queries. The registrar and transfer agency RTA, which is a big part of this unit, maintains investors' records as well as allots or redeems units, processes purchase, redemption, switch request, dividends, etc. It also generates the account statement that an investor receives. See, regularly the investor receives the account statement from the RTA. There is a custody team within this group that interacts with the custodian for purpose of settlement of various transactions that the fund management team initiates. The fund accounting team maintains books of accounts of each individual mutual fund scheme and calculates NAV on the daily basis. The cash management team works as an interface between the banks and the fund management team. So we can see that various operations are carried out by different teams in the AMC. Now let us talk about sales and marketing team. This team reaches out to the investors through mass media, marketing campaigns, and through a distribution channel. Their major responsibilities include branding, advertising, management of various events, and distribution of mutual fund products through various distribution channels. Mostly, it is the team that would interact with the mutual fund distributors and take care of relationship management and engagement. This team also helps in the growth of the distribution network through various interactions and training programs. There are various functions which are carried out by the different teams in the AMCs. Now there are other functions apart from the functions which we have discussed before. The other functions are the account team handles the finances of the AMC. This unit is different from the fund accounting team. There is an administrative department that takes care of various facilities, offices, and other infrastructure. In many AMCs, the administrative reports to the finance function. The HR department is responsible for attracting, nurturing, and retaining talent within the firm. They take care of learning and development requirements of the personnel. The IT, that is Informational Technology Department, also referred to as Technology Team, takes care of the IT infrastructure required by various functions and departments. This may also include the AMC websites as well as the many facilities offered to investors and distributors with the help of technology. Now let us understand what is EOP, that is execution only platforms. Now there are certain platforms available which allows the direct planned transactions to happen by the investors. So execution only platform is direct plans of schemes in mutual fund, means any digital or online platform which facilitates transactions such as subscription, redemption, and switch transactions in direct plans of mutual fund schemes. EOP shall obtain registration from AMFI. The entity shall be a body corporate. The entity shall act as agent of AMCs and integrate its system with AMCs or RTAs authorized by such AMCs to facilitate transactions in mutual fund. Example is CAMS. EOPs shall obtain registration as stockbroker in terms of SEBI Stockbrokers Regulations 1992 under the EOP segment of stock exchanges. The entity shall be body corporate. The entity shall operate as an agent of investor and operate through the platforms provided by the stock exchanges. Now let us understand what is AMFI. AMFI, the full form of the AMFI is Association of Mutual Funds in India. AMFI and its role and function: to define and maintain high professional and ethical standards in all areas of operation of mutual fund industry, to recommend and promote best business practices and code of conduct to be followed, to represent to the government, SEBI and RBI on matters concerning the mutual fund industry, to undertake nationwide investor awareness program and protect the interest of investors, to regulate conduct of distributors including disciplinary actions, cancellation of ARN for violations of code of conduct. A major role of AMFI involves the registration of mutual fund distributors by alerting them AMFI registration number ARN, which is mandatory for becoming a mutual fund distributor. Periodically, AMFI also issues various circulars recommending the best practices for asset management companies as well as the distributors. An important point to note here is that AMFI is neither a regulatory body nor a self-regulatory organization. Now let us talk about the MCQs. See, please practice the MCQs very well, and the which we are talking about is repeatedly asked during the examinations. So go through and try to solve on your own. MCQ number 1. Mutual funds are constituted as trusts in India. Who are the beneficiaries of the trust? A. The employees of the asset management company. B. The mutual fund distributors. C. The unit holders. D. Trustees of mutual fund. And the correct answer is C. The unit holders. Question number 2. Who handles the day-to-day management of the mutual fund? A. Asset management company. B. Registrar and transfer agent. C. Mutual fund trustees. And D. Unit holders. And the management is conducted by the A. Asset management company. Question number 3. Whose job is it to track the various corporate actions like bonus, dividend, or right issues in companies where the mutual fund scheme has invested? A. Registrar and transfer agency. B. Custodian. C. Auditors of the asset management company. And D. Unit holders. And the correct answer is B. Custodian. Question number 4. Registrar and transfer agency function must be independent of asset management company and it cannot be retained in-house. State whether this statement is true or false. And the correct answer is false. Now see, any company, any AMC can have the registrar and transfer agency to maintain the record of the transactions which takes place apart from the AMC itself. Question number 5. With which agency are the mutual fund distributors registered? A. Securities and Exchange Board of India, that is SEBI. B. Fund Accounting Team. C. Depositories. And D. Association of Mutual Fund in India. And the correct answer is D. Association of Mutual Funds in India. Just now only we have talked that they provide us the ARN number after clearing the exams. Question number 6. Trustees of mutual fund can also be appointed as the trustee of another mutual fund. State whether this statement is true or false. And the correct answer is B, false. Only one person can be the trustee of one mutual fund. That is the rule. Question number 6. AMFI is neither a regulatory body nor a self-regulatory organization, SRO. State whether true or false. And the correct answer is A, true. Question number 7. Who has the basic role in protecting interest of investors? A. Trustees. B. AMCs. C. Fund managers. And D. Sponsors. And the correct answer is A. Trustees. The trustees' main function is only to protect the investor, money especially. Question number 8. What is the minimum percent of net worth of AMC to be constituted by sponsors? A. 40%, B. 60%, C. 65%, and D. 45%. And the correct answer is A. 40%. Who appoints the scheme auditors? A. Trustees. B. AMC. C. RTA. And D. Sponsors. And the correct answer is A. Trustees. Question number 10. Who among the following ensures the compliance with SEBI regulations and defines functioning of AMC? A. Sponsors. B. Trustees. C. Custodian. And D. Depository. And the correct answer is B. Trustees. Question number 11. Who makes the application to SEBI for registration? A. Sponsors. B. Registrar. C. Custodian. And D. Both B and C. And the correct answer is A. Sponsors. Now see, whenever any application has to be made, the sponsor has to go to SEBI and register it. Question number 12. Investors need not go through the process of KYC every time once they are registered with KRA and obtains a letter from KRA. Stay true or false? And the correct answer is A, true. Which of the following is rated by credit rating agency? Equity shares, B, debt fund, C, equity oriented mutual fund, and D, all of the above. And the correct answer is debt funds. Question number 14. What is mutual fund? A, pool of money, B, share market, C, money market, and D, none of the above. And the correct answer is pool of market. Now see, all the investors come together and make a pool of money over there. So the correct answer is A, pool of money. Question number 15. With which agency are the mutual fund distributors registered? A, SEBI, B, NISM, C, MFI, and D, Depository. And the correct answer is C, MFI. MFI only provides us the ARN number. Question number 17. Redemption from one scheme and purchase into another in combined transaction is called A, takeover, B, switch, C, withdrawal, and D, none of the above. Now this is known as B, switch. Question number 18. In mutual funds, trust deeds are executed between trust and A, AMCs, B, investors, C, SEBI, and D, sponsors. And the correct answer is D, sponsors. Question number 19. Distributors receive the commission in the form of direct commission, B, trail commission, C, upfront commission, and D, none of the above. And the correct answer is B, trail commission. Now, see, earlier there was upfront commission also, but nowadays it has been changed and only the distributors get the trail commissions till the units are held in their account. Which of the following Question number 20. Which of the below not an advantage of mutual fund? A, choice of overload, B, transparency, C, affordability, and D, liquidity. Now see, whenever such question comes, you have to understand what is the meaning of each of this. There is transparency in mutual fund. There is affordability. Means any a person if you wants to invest even 500 rupees a month, they are allowed to do that also. There is liquidity. Means if you want to redeem and get the money, you can do that also. So choice of overload is the correct answer. That is A, choice of overload, because there are many schemes. It is difficult to find which is the best scheme for the best customer. So here is the role of the distributor to help them and select the correct fund for them